Visa is one of the largest companies in the world, controlling the way money flows globally and playing a significant role in the world economy. For nearly 80 years, Visa has dominated the digital payments market with little competition. During this time, banks with trillions of dollars in assets were the main authorities in the financial sector. However, Visa, which started as a simple payment processing company, surpassed these giants and became the most valuable financial company in the world. In 2023, Visa processed an impressive $14.8 trillion in transactions in the past year, setting an incredible record and solidifying its leadership position. With its enormous advantage over competitors, Visa has established itself as the leading company in the payments and credit card sector, something that seemed impossible just a few decades ago. In 1928, a visionary banker was about to change the financial destiny of California and eventually the world. Amadeo Gianini, one of the greatest visionaries in the banking sector, was the most influential figure on the West Coast of the United States. His bank, the Bank of America, had achieved an extraordinary feat, $1 billion in assets, a milestone that at the time seemed almost unattainable. While the big banks on the East Coast, such as JP Morgan, Citibank, and Chase, competed fiercely for financial market leadership, the Bank of America stood out on the West Coast, driven by the growing economy and the massive immigration to California. Giannini, who had risen from humble beginnings, now found himself as a man of enormous fortune and power, a true transformation from his journey of overcoming personal hardships to escape poverty. Amadeo Giannini was born into an Italian immigrant family, and from a young age he noticed the inequalities and struggles his community faced in the United States. Unlike many, Giannini not only saw these struggles, but also sought ways to use his vision and influence to help Italian immigrants fighting against discrimination and social and economic barriers. He knew that an individual's prosperity would have no real value if it wasn't shared with those who needed it most. With this commitment in mind, Giannini decided that his bank would not only serve the wealthy and powerful, but also the rising middle class and immigrants, groups that were largely neglected by the financial sector at the time. Giannini founded the Bank of Italy in San Francisco in 1904 with a clear mission: to serve those who had been excluded from the traditional banking system. The idea of including immigrants and the middle class in the economic process was revolutionary. He believed that a bank could be more than just a financial institution; it should be a social agent of transformation. His business model was based on generosity, mutual trust, and the belief that finance could improve people's lives. He didn't want to just generate profits, but to create opportunities for those who were economically marginalized. Soon, the Bank of Italy became a true revolution in the banking sector. Instead of merely offering financial services, the bank cultivated a trusting relationship with its local communities. Giannini understood that banks could be a force for inclusion, providing many citizens with a chance to thrive. During a period of rapid economic growth in California, the Bank of Italy was one of the most benefited institutions, becoming a crucial pillar in the region's economic development. By the end of the 1920s, the bank had surpassed $1 billion in assets, an impressive feat for the time, and the institution grew exponentially. As the Bank of Italy prospered, Giannini made a strategic and visionary decision. The bank needed to expand and strengthen further. Through strategic mergers, he transformed the Bank of Italy into the Bank of America, one of the largest and most influential financial institutions in the world. Giannini's impact on the banking sector was not just financial. He redefined the way banks viewed their role in society. In addition to financial success, Giannini also changed the culture of the banking sector. He established the Bank of America as a financial supermarket, offering a full range of banking services. This included not only checking and savings accounts, but also loans, insurance, and even investments. His goal was to make banking services accessible to all social classes, allowing even the most humble workers to access credit and financial services that had previously been reserved for the elite. Giannini's vision wasn't just about accumulating wealth, but about promoting social mobility and offering a path to economic advancement for those who otherwise would have been outside the system. In the 1950s, the Bank of America entered a new phase of growth, driven by the leadership of S. Clark Bass, who became president of the bank in 1954. Baise, who had been a close collaborator of Giannini, preserved his predecessor's innovative visio, and while seizing new economic opportunities in the post-war era. World War II had drastically changed the economy of the United States, with an expanding middle class and an economy now more reliant on consumption. Credit became an essential tool for many families wishing to purchase goods and services, and the Bank of America quickly recognized the opportunity to further expand its reach. It was during this period of prosperity that the Bank of America launched a revolutionary product, the BankAmericard, which would become a milestone in the history of the financial sector. The BankAmericard was one of the first widely accepted credit cards, offering consumers a quick and convenient way to purchase on credit. With the launch of the BankAmericard, the Bank of America not only solidified its leadership in the banking sector, but also helped shape the future of payments, transforming how consumers conducted transactions worldwide. This move was a landmark, not only for the bank but for the credit card industry as a whole, and placed the Bank of America on a path to dominance in the payments sector, which would culminate in the global impact of Visa. The BankAmericard and Giannini's vision of a bank accessible to everyone, regardless of social class or origin, transformed the Bank of America into a global financial giant. Just as Giannini started a revolution in the U.S. banking sector, Visa followed that path, expanding the vision of a globally accessible and efficient payment system. Today, both institutions, each with its unique trajectory, continue to shape how the world handles finances. Giannini's legacy, with its emphasis on inclusion and social transformation, lives on not only in the Bank of America, but also in the way companies like Visa impact our daily financial lives, permanently changing the global financial sector. Instead of directly robbing the bank, the criminals adopted a more disguised strategy. They invaded the deposits and stole the BankAmericard cards that had not yet been sent to the customers. At that time, the systems for tracking and canceling individual cards were rudimentary, lacking the sophistication we have today. Since the stolen cards did not have embossing, this indicated they were not yet linked to specific customers, offering an opportunity for the criminals. Instead of using them directly, they tried to resell them to the bank itself, putting the institution in an extremely vulnerable position. This type of crime, credit card theft, was something new with great potential to cause damage. The bank, realizing the gravity of the situation, feared that the misuse of these cards would cause financial damage greater than the amount the criminals were demanding as ransom. As a result, the institution decided to repurchase the cards, thus avoiding the risk of misuse and minimizing possible losses. However, this theft was only a small part of a much larger set of problems that BankAmericard and its partner banks were facing. The credit card transaction system involves several interconnected banking institutions, and most transactions involved at least two different banks. When a customer made a purchase with their credit card, the commercial bank paid the store the amount corresponding to the sale. Then the commercial bank sent the sales receipts to the issuing banks of the customers who made the purchases. These banks in turn paid the commercial bank, keeping a portion of the transaction known as the interchange fee. This fee was crucial for the system's operation, but the process of transfers between banks had to be closely monitored. Otherwise, failures could arise and compromise the entire financial structure. Finally, the customer's bank charged the customer for the purchase amount. When the customer paid the bill, the transaction was officially completed. However, with the soaring increase in transactions, the system was rapidly approaching a critical point where the existing infrastructure would no longer be able to keep up with the growth. If BankAmericard didn't find an innovative way to expand its operations, the entire business model could collapse, severely affecting the finances of its customers and jeopardizing the stability of the involved banks. It was in this scenario of pressure and uncertainty that an unlikely figure emerged, someone with a unique perspective who could transform the situation. He came from an unexpected place, the state of Utah, known for being predominantly Mormon. This man, whose name was D. Hawk, had a life journey that uniquely prepared him to face such a challenge. D. Hawk grew up on a farm, an environment where solitude and constant contact with nature marked his childhood. Although his life was simple, he developed a deep connection with the land and always reflected on the world around him. As a member of the Mormon Church, Hawk learned early the value of discipline, getting used to waking up early and working hard. However, over time, he began to question both his faith and the educational system in which he was immersed. His relationship with his father, an imposing and extremely disciplined figure, was never easy. D, more introverted and inclined toward solitude, did not share his father's rigid view of how things should be done, which often led to conflicts. Hawk believed that if something needed to change, the world around him should change, not himself. This outlook on life led him to face many challenges throughout his journey. After finishing college, D. Hawk struggled to keep stable jobs. Despite being highly qualified, he couldn't adapt to the rigid corporate environments, often clashing with his superiors. This difficulty led to several dismissals, and in the early 1960s, he found himself in a humiliating situation, needing to rely on unemployment benefits. Without money, without prospects, and with a pregnant wife, Hawk found himself alone, except for his wife Pearl and their young children. In a moment of desperation, he went to the unemployment office to ask for help, but he was consumed by shame. Sitting in his car for over an hour, he couldn't bring himself to stand in the line of applicants, fearing that doing so would violate his work ethic principles. When he finally gave up, he went home and had to explain to his pregnant wife that he couldn't apply for unemployment. Determined never to face that situation again, D. Hawk made a promise to himself. He would do whatever it took to ensure the success of his family. Even as problems piled up, he refused to give up. His persistence paid off when he secured a job as an assistant at the National Bank of Commerce. Although the job was simple, he was willing to do whatever was necessary to support his family. Later, he was invited to help launch a new credit card program for the bank. Initially, Hawk was skeptical about credit cards, seeing them as a reflection of a materialistic financial system. But he decided to dedicate himself to the project. He knew that this opportunity could be the key to proving his worth. In 1967, with the Bank of America's licensing, the National Bank of Commerce successfully launched its credit card program, which quickly gained popularity. The operation grew rapidly, and thanks to Hawk's dedicated work and innovative vision, he was promoted to leader of the credit card operation. By the end of the 1960s, the credit card industry experienced explosive growth, fueled by the post-war economic prosperity in the United States. As a pioneer, BankAmericard, launched by Bank of America, quickly became the leading credit card in the country, forever changing the global financial landscape. With Hawk's leadership, BankAmericard not only overcame the initial crisis, but also became a milestone in the evolution of the global financial system. His ability to think beyond the limitations of the traditional banking system allowed the institution to reinvent itself and thrive in a rapidly expanding market. Hawk's vision, combined with his relentless determination, made BankAmericard a symbol of innovation and resilience during challenging times. The consumer's choice is often influenced by market forces that end up limiting competition, as is the case with Visa. To understand how the company became a monopoly, it is important to analyze the network effects. These effects work similarly to social media, like Facebook. When more vendors and consumers use a payment network, it becomes easier to use and more present in everyday life, which attracts even more users. This cycle of increasing participants makes the network more useful and indispensable, ultimately creating a scenario where Visa not only dominates the market, but also makes it harder for new competitors to enter, consolidating its monopoly. However, this dominant position does not come without challenges. The constant legal disputes Visa faced forced the company to pay billions of dollars in settlements with large companies like American Express, Discover, and with retailers involved in class action lawsuits. While Visa has become a true money-making machine by processing billions of transactions, the company has been facing increasing financial pressure. The cost of legal battles, combined with the risk of unfavorable decisions, puts the company's financial health in a vulnerable situation. Visa is approaching a point where it may not have enough resources to fulfill these legal obligations, which could further harm its financial stability. Amidst this financial difficulty, Visa found a strategic solution. The decision to go public was key to ensuring the company's continuity and growth. Visa's record IPO, which became the largest in U.S. history at that time, was a smart move. Even in a volatile market marked by fears of a credit crisis, the initial public offering attracted a large number of investors, both institutional and individual. The success of the IPO not only helped Visa stand out in the financial market, but also injected confidence into the sector, bringing more stability during a period of uncertainty. This renewed confidence was crucial for Visa to solidify its position as a global powerhouse and helped reinforce the company's positive outlook, even in the face of legal and financial challenges. Visa's IPO, held in 2008, set records by raising over $17 billion, even as the financial crisis was about to unfold. Visa's strong business model, combined with its dominant position in the payment sector, caused many investors to overlook the legal challenges the company was facing. Visa, which began as a decentralized payment network, was able to transform into a financial giant, gaining a leadership position in the global market. Its strategic vision and ability to adapt quickly to a highly competitive market allowed Visa to not only survive the financial crisis, but emerge even stronger from it, further solidifying its global relevance. In 2023, Visa reached impressive milestones with revenue of $33 billion and a net profit of $17 billion. The company processes over $12.3 trillion in transactions, solidifying its leadership in the payments market and positioning it among the most valuable companies in the world. Recently, Visa's stock reached an all-time high, reflecting the company's continued success. The stock price has consistently risen following the latest financial report, which indicated a positive outlook regarding consumer spending growth, further boosting investor confidence. This steady growth demonstrates Visa's ability to remain relevant in an ever-changing market while maintaining its dominance in the payment sector. Visa's journey was only made possible thanks to the vision of one man. His strategy and boldness were essential in transforming Visa into a global powerhouse. He was able to recognize the changes happening in the market and anticipate the needs of consumers. With a clear vision of the future, he positioned Visa for sustainable growth and expansion. Visa's story is an example of how innovation, strategic planning, and adaptability can lead a company to dominate a competitive market, even in the face of legal obstacles and financial challenges. Its journey not only demonstrates financial success, but also highlights the impact of visionary leadership that knew how to seize market opportunities and shape them effectively to create one of the largest financial companies in the world.